All right. Good morning, everyone. It is 8:32 on the morning of August 22nd, 2022, and this is my pre-market strategy session. So today, I titled the video "SnP Bearish Technical doesn't get easier than this, but now what?" Um, and so, really, here it is. This is, the technical that everybody's looking at. Everybody or not, I shouldn't say everybody. A lot of people are looking at this same downward support and resistance line. I should say just resistance. Because until it breaks up above and holds above, it's not a support line. It's only a resistance line. But yeah, here it is, and I guess things can be self-fulfilling. I've seen a lot of different traders with this same line on their charts, and I guess if there are enough people looking at the same technical, then it just sort of becomes true. So yeah, that's if you were averaging into shorts right in here at this technical resistance, you're getting paid right now, and it's very good. Now this really could be the start of the next major leg down, which there's someone who is a big time Elliott wave chart theorist, I guess you could call him, who is saying, hey, the next leg down is down here to this 340 area on the S&P. Of course, nothing goes down in a straight line, and so it would probably look a little bit more like something like this. But yeah, you only get rallies like this in a bear market. This is in this move that's happened. Let's see, like I would call it the past 6 weeks. See, from June to past 8 weeks, that's an 18.65% move. That's a year's worth of gains on the S&P in a matter of 8 weeks. And you only get volatility like this in bear markets. So yeah, it's still bearish, and it's definitely time to take advantage of trades to the downside. So the short squeeze is over. It looks like to me that all the people that were short and couldn't take the pain anymore got out, probably somewhere right in here. And all of the people who were like, look, it's bullish again, it's time to buy, are probably buying right here. So right at the top of this move, there's probably, let's look at volume here real quick. I think volume is still pretty low. It's still summertime trading, so the volume is probably gonna stay. Yeah, the volume's a little bit low. But in times when if you're comparing volume like this, let's see. Really, volume isn't bad here. Let's see, what can I see? There we go. Okay. 60 million shares, 60 million, 55 million, 60 million. That's still quite a bit of volume, even for the summertime. If we go back and look at summertime, back here in 2021, that's about right for volume. 50, 58 million, 60 million, roughly somewhere in there. And it's the dips and so forth when volume is higher. Now comparing this past 8 months or so, we've got days where there were, gosh, let's see this day right here, 252 million shares on January 24th, 2022. 200 million, the day before that. So comparatively speaking, Yeah, I mean, in sort of relative terms to all this craziness going on, yeah, volume is low. It's tapered off, but it's still, for summertime, it's kind of in the normal range. I think this down move can be trusted, but if you weren't getting in right here, I would wait until we get the next up move to sell the rip. So, you know, it is what it is. All right. So yeah, we have the VIX popping up here. The VIX decided to, find a bottom down here at the bottom end of the risk range, and now it shot all the way to the top of the risk range. I haven't updated the VIX's range yet, so if I were to guess, I'd guess that the top of the range is probably closer to about 27 right now, rather than down here at 24. Here we have the 10-year, 2-year split or spread, and it's still negative. Just keep in mind that the 10-year, 2-year can stay negative for a really long time before the market starts to really fall off a cliff. Now, so here it is, in 2007, and now here it is in 2000. And there's 1990 also. And the yield curve stays inverted, and it's only after the yield curve starts to normalize that the market really starts to crash. So just keep that in mind. The big difference, though, here is that the Fed wasn't tightening going into, a sour economy. Now, here we have the Fed tightening into a economy that is looking more and more bearish, or the economy is looking weaker and weaker. The data coming out is weaker and weaker. I imagine that we'll probably see a further spread, a deepening of this spread, this delta between the 10-year and the 2-year. It's I don't play rates. I don't buy and sell bonds. I have a portfolio, and I let it just do its thing. And I use a trading account to hedge the performance of my portfolio, basically. Oh yeah, Bitcoin. Here's another one. Check out this neckline on Bitcoin. This is the 10-minute chart. Let me go to the daily chart here. I don't know how I didn't look at Bitcoin on Friday, I guess, because this move happened. The majority of this big move that happened on the 19th happened at like 2 o'clock in the morning. And so when it came time for me to do my morning trading session, pre-market strategy session, the move had already been made. So here's the neckline to the head and shoulders. Here's the head and shoulders pattern. Here's the neckline. And again, we got another chart. It did poke through, and went to retest, but failed the retest there. And now is headed lower. And I think, this is Bitcoin is getting ready to go quite a bit lower. It's got, I don't know. I mean, how far down does it go? Below, at this point, if it can't hold this roughly 19,600 level right here, and it starts breaking down below and moving further down, I don't know. I mean, how far down does it go? It's hard to say. This is a long-term distribution pattern right here, and I mean, it could be 3 years or a year and a half until it bottoms out. 3 years until it starts to stabilize at some price. So, yeah, in where Bitcoin goes, pretty much almost the entire rest of crypto goes in the same direction. So yeah, things are looking pretty bearish, and I'd be looking for bearish setups today. All right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. Now, postscript here, let me let my son chime in. My son Adam is sitting next to me today at the trading desk, and he has been raising his hand. He wants to say something.
Hi guys. So also subscribe to Adam Schmadam channel because we really need subscribers.
Okay, yeah. So be sure to subscribe to the Adam Schmadam YouTube channel. Here, let's take him over to YouTube real quick, son.
Yeah.
Let's look up the Adam Schmadam channel.
So guys, the Adam Schmadam channel is where we play Roblox.
There it is.
And we play a whole bunch of games. We play Adopt Me, we play Strawman Simulator, we play Little World, we play War Tycoon, that's
yeah, so
and find the pandas, and then
yeah.
And then Rainbow Friends, and a whole bunch of videos. So make sure you check that channel out too. Right?
All right. Say goodbye to everybody.
Goodbye. Have good trading.
Have a great day, everyone.
Have a great day. Have a good trading week too.
I am out.